Welcome back to our weekly update. I'm Charlotte McLeod with investingnews.com, and I'm here to give you a quick look at our top stories for the week. The gold price declined this week, slipping from just under $19.40 per ounce at the beginning of the period to about $19.20 by the end of September 7th. The U.S. Federal Reserve's next meeting is still a week and a half away, but there's already a strong consensus about what the outcome will be. CME's FedWatch tool shows that traders now see a 93% chance that the central bank will leave rates unchanged from the current level at 5.25 to 5.5%. Recent comments from Fed Governor Christopher Waller support that idea. Speaking to CNBC, he said last week's strong U.S. economic data will allow officials to proceed carefully. Even so, he emphasized that inflation is key and hikes may not be over yet. The Fed's next meeting runs from September 19th to 20th. While gold had a slow week, activity was strong in the uranium sector, where major miner Cameco has been turning heads. In an update released on September 3rd, the company spoke about operational challenges, saying that the Cigar Lake mine is now expected to produce up to 16.3 million pounds of U3O8 this year, down from the previous forecast of 18 million pounds. Meanwhile, output from the MacArthur River Key Lake operations is set to come in at 14 million pounds of U3O8, less than the 15 million pounds predicted earlier. Altogether, that amounts to a 2023 production cut of 2.7 million pounds for Cameco. The company has offered various reasons for the decline. It said that Cigar Lake's productivity was impacted in Q2 of this year when mining activities were initiated from a new zone in the ore body, with equipment reliability issues further affecting the asset's performance in Q3. Aside from that, while the Key Lake mill continues to ramp up, it's facing operational problems due to the length of time it was on care and maintenance. Uranium experts have been speaking for years about the tightness of supply amid growing demand, and the news from Cameco adds support to their positive forecasts. In fact, Cameco itself discusses the growing risk of supply security in its press release, saying it comes at a time when the demand outlook for uranium is stronger and more durable than ever. The U3O8 spot price is currently above $60 per pound, still below its all-time high of more than $130. Many uranium bulls believe it could reach and surpass that level during this cycle. We'll be watching to see how the situation develops. That's all for this week. If you like this video, make sure you subscribe to our channel and turn on notifications so you don't miss future updates and interviews. You can also follow us on social media or click below for our report or any article mentioned in this video. We'll see you next time.